Hi everyone, so let's talk about everything you need to know about commodities, supply and demand, and what affects what is more stable. So I'm going to go over each and every product that I trade, and this is all going to be based on how I trade, which is neutrally. I sell triangles, and this is maybe somewhat of a boring video, but extremely important of basically knowing when to be in or out of the market depending on what's going on with the supply and demand, because the price of commodities is basically all about supply and demand. Other than gold, crude oil, they can also just react to geopolitical tensions, regardless of the supply or demand. But other commodities are really stable or really follow the supply and demand chain. So just basically, let's go over the basics. If supply goes up and demand stays the same, the prices will go down because we have the same demand, but we have way more supply in the market. So very simple. Price will go down. If supply goes down, the price will go up because you have demand for the product, but you have less of that product available because the supply went down. And if the demand goes up, the price also goes up. If the supply stays the same but the demand goes up suddenly, the price will shoot up because again there's more demand and there's not enough supply to satisfy the demand. And then if demand goes down, the prices will go down as well, assuming the supply will stay the same. So I think it's all pretty self-explanatory, and I guess the key thing is most volatility in commodities is a result of an issue or a disruption with the supply chain. So mostly there are issues with the supply chain and not with the demand. The demand is usually pretty stable. However, sometimes demand is definitely the main factor, like with natural gas. And again, I'm gonna go over each and every product and explain each and every one of them and how they work. And I promise you, it all just makes sense. It's all pretty simple. It's not like stocks where nothing makes sense, where a company can have a pretty good earnings report and then the price will go down. It makes no sense at all. Here, everything is very logical, and if you follow the logic, you'll be doing really well in the commodities market. So the supply and demand of products. So let's go over all the products that we have. So let's begin with gold. So gold, it's a bit of a different commodity. It acts more like a currency rather than an actual commodity. However, China, US, and Australia produce the most gold in the world. So you can imagine gold is pretty regulated. The gold mines are pretty stable. Not much going on with gold on the supply and demand chain. It's really stable on both sides, on supply and on the demand. Gold is viewed more of a safe haven. So when things are not okay with the stock market or there's some geopolitical tensions, gold tends to react to that. So gold and silver and probably crude oil are somewhat of a mixture of supply and demand and also geopolitical tensions and different situations. However, gold is definitely the heaviest one out of the three. It's really way more reactive to news and stuff like that. Now, silver, it can act as a safe haven, so it's basically like the little brother of gold, so it doesn't really act the same exact way. But silver is way more, like 68% of the use of silver in the world is for industrial use, and then the rest is obviously more of like a precious metal, where people just store their value. Where gold, I don't know the exact percentage, but I'm sure gold is mostly used for store value and not for actual application. So, but silver is definitely used for really everything, from cell phones, computers. There's silver in everything. So it can definitely act as a safe haven like gold. But however, Mexico is the single biggest producer and exporter of silver, which is really important to know which country is exporting and producing what. Now, there's a big difference between a country being the biggest producer and exporter, because China, they have a lot of people. They have, over 1 billion people. So they definitely produce the most amount of whatever commodity, right? But it doesn't mean they export. It doesn't mean they're the biggest exporter, because most of what they produce, they use within the country. So this is also pretty important to distinguish. So Mexico is the biggest producer and exporter of silver. So you can imagine whatever happens to Mexico to the silver mines really affects the price of silver, right? So again, silver is definitely more reactive to the supply and demand chain, but again, it's really stable, and usually demand rises slowly for silver year over year, and also the supply is it's pretty heavily regulated, right? Because nobody wants the price of silver to crash if for some reason someone found a bunch of silver, right? Then, like we said, it will be way more supply, the price will go down, and this is not in the interest of the mine companies. So silver and gold will always be pretty stable. Now, copper. So copper is definitely a heavily used metal, and the biggest copper mine in the world is in Chile, and they are definitely one of the biggest producers, I think, exporters, of copper. So it's Chile and Peru, but Chile is definitely the single biggest one. And you can imagine if something happens to the copper mine, which it did happen in 2024 in March. The one of the copper mines collapsed, and you can imagine if we have the same amount of demand, but supply suddenly goes down, the price shot up quite crazy, and this is the reason why. Again, it all makes sense, right? So also it did not happen overnight, right? So there were reports of the mine collapsing. Now nobody really knows right away how bad it is, so the price reacted a little bit, and then you follow the news, see what's happening, and then the news slowly broke that the mine is fully collapsed or whatever it was, and it will take quite a while to get up and going again. And on the other side, the biggest copper consumer is China. So China, they make everything, so they need a lot of copper, and their real estate is massive, which copper is also being used in real estate, in electrical, and in everything really. So it's a pretty solid commodity. So the two things that can affect the price of copper is if anything happens to one of the mines, which is pretty rare, but it can happen. But mostly if something happens to China. So if something happens to the economy of China, it will heavily influence the price of copper. And more than often, if you follow copper, you'll see sometimes the price goes up because there are fears that the economy of China is slowing down and they might not consume as much copper. So copper is definitely mostly affected by the demand from China, and because the supply is usually pretty stable. But again, things like that happen when a mine can collapse. So natural gas. So US and Russia produce the most natural gas in the world, and they also export most of it. Now, the biggest demand is from Europe and North America at winter time, as natural gas is used for heating households, right? So, in Europe and in North America, we use natural gas for heating. So there's a lot of demand during the winter, and this is basically what can affect the price. So the demand, the supply is usually pretty stable unless there's like a geopolitical situation, war, whatever it might be. Then the supply might get disrupted. But the most of the demand for natural gas, or for what moves the market, is depending how cold or warm the winter will be, and this is hence why natural gas is usually pretty volatile during the winter, because sometimes it's a really cold winter, sometimes it's a warm one, so the price can really fluctuate based on the demand, because the supply usually sometimes it cannot keep up, sometimes there's oversupply, so there's no really way to know exactly how cold of a winter it will be. So this is for natural gas. I think it's pretty so far it's pretty simple, completely makes sense. So you would know what to look for. And this is also why during summertime, natural gas is pretty much flat. It just goes sideways, like pretty much every year, which is perfect for strangles for how I trade, which is why I love it, and which is why I stay away from natural gas during the winter time. So it's starting October, I'm not even touching it, right? And this is because natural gas is heavily used for heating for households. Now, crude oil. So the US, Russia, and OPEC, which is not a country, but it's a collection of a few countries that produce a lot of oil. They definitely produce the most oil in the world. And OPEC basically can just control the price of crude oil easily. They can easily, announce that they're increasing their production. of X amount of barrels per day, and then the price will drop because there's more supply. And well, I guess the same with the U.S. and Russia. They can also announce this, that they will increase the oil production. They can easily do it. Again, it's all really regulated. Well, not regulated, but controlled. It's really easy to control the price of oil for these super houses, right? But this is usually what controls the price of oil, and oil is also reacting to geopolitical tensions. Usually, it might go up, might go down. It depends on what's going on. But the supply side is what really affects the price of crude oil. And again, usually OPEC, they are probably the more aggressive ones. They are usually trying to keep the price of oil within a certain range where they know they're maximizing their profits, and they're not overcharging or not undercharging people. So basically, for them, it's all about making the most amount of money, where they know, at $45 a barrel, they are likely to make the most amount of money, because this is where people are, feeling that the price is okay, and they will buy more oil, or purchase more crude oil, or use more gas for that price. Now, US and China are the top oil consumers. So obviously China is one of the biggest countries in the world. They, again, make everything basically. So they use a lot of oil, and the US as well. They also they also use a lot of oil. So this is on the demand side. But again, the demand is usually not that important for crude oil. It's mostly the supply stuff, and the geopolitical tensions, if there are any. So let's go ahead and take a look at the other products. So this will be all grains. So ZW wheat is, Russia is the single biggest exporter of wheat in the world. So with wheat, the demand is pretty stable. We need wheat for everything basically, and we can make a lot of things out of wheat. And if something happens to Russia, you can imagine the price of wheat will react accordingly. So this is for the supply and demand of specifically of wheat. Demand is pretty stable, and wheat pretty much reacts to disruptions to the supply chain. Corn, U.S. and Brazil combined export 50% of the corn in the world, so quite a bit. And Ukraine is a big exporter of corn to Europe, right? So which is, also matters, because Europe is pretty big player, a pretty big consumer. Even though Ukraine is not one of the biggest exporters, they are, I think, the biggest or one of the biggest exporters of corn to Europe, which is important, right? So corn again, grains are all influenced by the supply and not by the demand. The demand is always stable, unless something crazy happens, some kind of regulations pass through. But usually it's only because of the supply. If there's some kind of disruptions to the supply, if there's a drought in Brazil, or if something happens to the crop, then it will it will influence the supply, which in turn will affect the price. So soybeans, soybean meal, and soybean oil are kind of the same thing. US and Brazil, they export the most soybean in the world. Soybean meal, Brazil and Argentina, they're the biggest exporters for soybean meal and soybean oil. So these are essentially, if there's too much rain or there's floods in right around the crop of soybean meal and soybean oil in Brazil or Argentina, this is usually what you would read about when you see the price of either one going crazy. This is we'll have probably to do something with Brazil and Argentina most likely. And this is about it. I mean, this is pretty simple, and like I mentioned, demand for grains is very, very stable. So the only issues arise from the supply side, which is bad weather, like we said, if something happens. Now, tariffs can also definitely affect the supply, and geopolitical tensions, of course. But again, the grains, they are pretty much only affected by the supply, or the price is only pretty much affected by the supply. Demand is pretty stable, and there's no surprises in the demand for the most part. So hopefully this video was pretty useful to you. I mean, I think it's really, really important to understand what affects each commodity, and what are the biggest exporters of each commodity, and producers and so on and so forth. And this can definitely only enhance the trading, and especially you'll be able to make, well, I'm able to make much better decisions because I just have those this basic knowledge, and then it is pretty basic in my opinion. It's not advanced in any way. Anyways, thank you so much for watching, and I will catch you in the next one.